Everyone says China is collapsing out of dollars, out of credit, out of time. But you know what? The numbers, they tell a very, very different story. So let's start with the official story, the one they want you to see. On paper, China's foreign exchange reserves look incredible, right? They're sitting at $3.343 trillion. That's the highest they've been since 2015. This is the number that screams strength. But then you see a number like this. A jaw-dropping $58.3 billion just gone. Capital flight. Money flooding out of the country in a single month. Now that's a number that signals some deep-seated weakness. And the contradictions, they just keep piling up. Get this. While China is dumping U.S. treasuries down to its lowest holdings since 2008, it's also on an absolute record-breaking gold buying spree. At the very same time, its trade surpluses are hitting new highs, and it's quietly building this whole parallel financial system to get around the dollar. So what is the real story here? I mean, is China really on the brink of running out of US dollars? Or is this something else entirely? A calculated, strategic escape from the dollar's grip? That is the exact question we are going to unpack today. All right, to really get to the bottom of this, we've got to start with what I call the surface crisis. We need to understand why this whole narrative of China's collapse has gone so viral. Okay, so on the surface, that $3.3 trillion number, it looks bulletproof. But here's where it gets really interesting. A massive chunk of that money isn't really usable. See, once you start subtracting the short-term external debt and the enormous, often hidden debt from these things called local government financing vehicles, just think of them as these murky regional slush funds, well, the real buffer, it shrinks dramatically. In fact, analysts at places like BBVA and the IMF figure China's actual safety net is only about $450 to $500 billion. Now that is a much, much scarier number. And this chart right here, it perfectly shows a deliberate strategic shift. China has been methodically selling off its U.S. Treasury holdings. They're now down a whopping 45% from their peak. This is not a panic sale, folks. This is a planned, calculated withdrawal from the U.S. debt market. And at the same time, you've got money just pouring out of the country. Foreign direct investment, it went negative for the first time in decades. We're talking a net outflow of $168 billion in 2024. And that's just the stuff we can track. Billions more are vanishing through these underground crypto and banking networks. But here's the real twist, the thing nobody talks about. China's huge trade surplus is actually bigger than all that capital flight. So if money is leaving, but even more money is coming in, where's the real weak spot? And that question brings us right to the heart of the matter. To understand the real risk here, you have to understand China's deep, structural addiction to the US dollar. This chart, this reveals the core of China's dollar dependency. See, the whole engine of its economy runs on critical imports. And for the most important ones, the ones it absolutely cannot live without, it has to pay up in US dollars. First on the list, semiconductors. We are talking about an insane $32 billion every single month. Actually, chips have now blown past oil to become China's single biggest import expense. And right behind that, you've got crude oil. That's another $27 billion a month. So just think about that. Together, these two things alone create this relentless, never-ending demand for almost $60 billion every 30 days. But it isn't just about paying for imports. Oh no, China is sitting on a dollar debt time bomb. We're looking at over $2 trillion in offshore debt, all denominated in US dollars. And with giants like Evergrande and Country Garden totally defaulting, investor confidence is completely shattered, all while a massive spike in debt payments is coming due in 2025. This is a ticking clock, my friends. And this brings us to a really critical point. China doesn't just have a simple dollar shortage. No, what it has is a full-blown dollar addiction. So how is China surviving all this? Well, here's the twist. Because while one hand is busy feeding that addiction, the other hand is quietly, secretly planning a great escape from the dollar system altogether. You know, despite all the headlines you read about economic trouble, China's export machine is still an absolute monster. It just generated a record trade surplus of nearly $200 billion in a single quarter. This creates a constant, massive fire hose of the very dollars it needs to feed its habit. So what's China doing with all those extra dollars? It's turning them into gold. Lots of gold. Officially, their holdings are just over 2,300 tons. But listen to this, many analysts believe the real number could be over 5,000 tons, more than double what they're admitting. This is a strategic play to build a financial cushion that is completely separate from the US system, a way to sanction-proof their economy. And this chart right here, this shows the most direct assault on the dollar's power. China is systematically kicking the dollar out of its own trade deals. Just over a decade ago, 83% of its trade was done in dollars. Today, that's crashed to 43%. Meanwhile, the yuan share has just exploded, from a tiny 2% to over 52%. So if China has a steady stream of dollars, a growing mountain of gold, and a rising yuan, what is the real threat? Well, the answer is geopolitics. Because China's system, as it's built right now, is incredibly vulnerable to a sudden shock from the outside world. See, the real danger isn't that China will just slowly bleed out of money. It's that its dollar lifeline could be severed, suddenly. Imagine major new US tariffs, or tougher sanctions on its oil supplies from Russia and Iran, or a complete blockade of the advanced chips its entire tech industry needs to survive. Any one of those things could trigger a genuine, full-blown crisis. So, let's answer the big question. Is China actually running out of dollars? Here's the verdict. No. China is not running out of dollars. It has the reserves, it has the trade surpluses, it has the gold. What China is running out of is time. Time to fix its collapsing property market, time to stop this historic capital flight, and time to build its new non-dollar system before a geopolitical shock brings the whole old system crashing down. So what does this all mean for you? What are the key takeaways? Well, in the short term, you can probably expect the US dollar to stay strong, the yuan to stay weak, and gold to keep climbing as this global hedge against all this uncertainty. But the long-term trend, that's what's fascinating. As China slowly breaks its dollar addiction and builds its influence backed by gold, we're going to see a massive shift in global supply chains. And the biggest winners? Countries like India and Mexico. Look, China's not going to collapse tomorrow, but for the very first time, the foundation under its entire dollar-based system is cracking. If you want deeper breakdowns just like this every single week, make sure you subscribe. And if you want to support the channel, the Buy Me a Coffee link is right down below. Let me know what we should explore next: the BRICS gold currency, the US debt spiral, or India's manufacturing boom. Drop a comment below.